I'm coming to you, old Vincenzo, hanging out in the old refrigerator, wobbling around, kicking my feet, and I'm here to tell you to join old Vincenzo's Gold Crypto Investing. Hit that bell notification and just rock your way into nice profitable trades and fleece heist and shist, the fleece heisters and shysters, and relax because you have that bell notification to give you all the latest news, breaking news, coin updates, and regulatory things. Peace and love. Heyo. Ever since we've been right there and held that confirmation, the 120 seemed inevitable, seeing what's going on in the overall equity markets. And I think that's a good end of the year target and beginning of 2023 target is the dollar to be up near 120. And then I think that's where it would start to maybe top out, because there would be major financial problems going on up there if it stayed up there too long. And we're already having them now. And conversely, gold has been consolidating to the downside. And I think that could actually continue to the downside, as this was a failed breakout out of a cup and handle. And I could see gold consolidating all the way down to this major area of support, all the way down here at the $1,400 or $1,500 range. That's something I didn't think was going to happen, that deep of a consolidation, but I could see how it actually does get down there. And that's what I'm waiting for and paying attention to. And I will be buying a lot more of my gold mining stocks if the gold price does continue to break deeper to the downside and we get sub down here. I will be loading up a lot more on those stocks because I know eventually those are going to rocket. And it's just been a very, it's been a humbling learning experience on what's actually taking place here with the whole, a whole deal going on here, right? But something that I thought would go down was the cryptos, and they went down very harshly. You can see Bitcoin from its old high, all-time, oops, we don't want that. We want our industry exclusive drawing tool. We want to delete that. Well, if we take our drawing tool or measuring tool and go from the all-time high to current price, it's down 69. It's funny, 0.83%. And you can see here the Bitcoin price has done the exact opposite, or it's correlated perfectly with the Fed. You can see this green line is when the Fed started to print money. Bam, Bitcoin price skyrockets. Then you can see we got to the middle of 2021, and you can see we started to form a top here as the Fed started talking about thinking about it. Then we pump back up, and just like the dollar did a double bottom, right? Last year, Bitcoin did a massive double top, and we diagnosed that out as an M-topping reversal pattern, or a mountain double top, as I call it, where you have the big mountain double top, the neckline, like a head and shoulders, and a targeted move is from the top of the double top to the neckline to the point of a breakout at the neckline. And that's how we got our target all the way down there at 13,336 when the price of Bitcoin was right here and rising still, because I thought down here in this falling wedge-ish pattern that we had down there at major support, I thought we could get a bear market rally, but I thought the bear market would rally when it came up to that upper resistance right there. And I thought this was the topping out, but it had one more push to the upside, right? But I never backed off that prediction that this was going to be a double top, because this would be a classic double top right there where the second peak comes slightly below the first peak and then the price rolls over. But this was just almost an exact double top, but it breached the old high barely by about a day, and then it quickly reversed and flushed to the downside. And conveniently enough, this is red line here is when the Fed started to tighten. And you can see as the momentum and the talking and the thinking about and the words from the Fed started to change, Bitcoin started to top out, and then it tried to make that relief rally up after it was down 50% from down here, and it topped out in a mountain double top right as the Fed said. Right in here, the Fed said, well, 2 months from now, we're going to start our first interest rate hike in January of 2022. Market sold off the next couple of weeks. Then it had a mini rally leading into that first rate hike, and then after the rate hike, it dumped. Then it consolidated to the second rate hike, it dumped. Then it consolidated to the third rate hike and dumped, right? And it's going to continue to do that. Now it's consolidating after the Fed missed a month in a rate hike, and then it's going to dump, right? Because eventually this price is going to come down there. But if we zoom in to the closer time frame, you can see what I would be watching out for in the micro time frame is you got that current major support at 19,290 that you would like to hold, because then you could try to make a run back up to major upper resistance at 21,000, 22,000, this old red line right here, right? That was your upper resistance back here. and back here. But if you fail to hold this 19,000 level, you're going to come straight down to 16,569 really quick, the bottom part of your last major support zone, before you drop to the top part of the shit house, right? AKA get my shit together zone. And that would be hitting this underneath target that we've had, right? So that's what we're watching out for in the Bitcoin price. The same thing as we've had with XRP. We've been getting rejected. We've been getting supported by this red volume indicator zone because we're above the mean of the volume, so it can try to act as bullishness. But we've had heavy sell pressure back here up about the 37-cent level, and the 37-cent level was the magical level because this was one last consolidation after a big flush. After a big flush right here that came all the way down from north of $1 and bottomed out at about 34 cents. We had that big consolidation for a few weeks. You can see we got down here in May and we didn't break till about 30 days. A lot of trading, a lot of money, a lot of shares. So anytime the price gets up there, that is a huge resistance point. And right now with the overall state of the markets and the crypto market, it's just too much for it. And the fear is eventually at some point, if we zoom out to the 4-hour time frame, you could say this is a big consolidation right there. And if you break that, you're going to come down into this 25-cent range. And that is your last line before you have the next big flash crash that would get you down to 18 cents or maybe even a little bit below, as there's not really any big major support in this orange support zone till you get all the way down here at 11-12 cents, right? But this is a major target we've had since 2022 when the price of XRP was, as you know, anybody that's followed this channel, since we were consolidating in this big pattern right here, which was a symmetrical triangle, we diagnosed it out in here, and that's when we came out with our target of 18 to 20 cents for early 2023, end of 2022, or 2022, or the end of 2022, beginning of 2023, because we thought it would take some time, and that's where we're currently watching out for. The key numbers to watch out for is 37 cents is major upper resistance, which I don't think you're going to get there in the next few days. 32 cents is initial underneath support. 29 cents is the bottom part of the volume indicator, and if you slip that, you're likely to drop down south of 26 cents and get into this orange support zone, right? So that's what's going on in the coins. That's a quick update this evening. Like, subscribe, and share. Hit that bell notification, and most importantly, you take action. You 1000x your life. You get that education to give you that upper hand on the ever-changing financial markets around the world. Peace and love to you. Yes, you, the beautiful audience.